Good morning, our dear subscribers. The FutureTrend channel is again with you, and this morning I think that everybody in all kind of participants in the financial markets discussing yesterday's event, or probably the major event of this week, the Fed's meeting. As you know, Jerome Powell told that he is in favor of gradual rises of an interest rate in the United States. And despite of the hike of yesterday, as you know, the dot plot showed us that still the policymakers, United States policymakers, still predict only three increases of the benchmark interest rate in the United States for 2018 instead of four some of investors feared before. From this point of view, as you can see now, the dollar is on the sidelines at the moment, under kind of selling pressure. At the moment, it's very hard to say how long such kind of process will continue in the nearest future. Anyway, as you can see, we changed our strategy portfolio in the major currencies. We still pursue the long trend in the euro dollar as well as in the other majors. We still suggest that sooner or later the United States currency will be back to its underlying bearish trend of 2018. But probably to do so, some other factors should play a role into the foreign exchange market. What kind of factors at the moment we don't know. But to say the truth, for example, regarding the euro dollar, for the euro dollar to go much higher from local levels, to break above, as you know, next reliable resistance zone in the euro dollar lies around 24.50. Some other factors should play a kind of decisive role, and this factor is normalizing of monetary policies from the part of the European Central Bank. We'd like to pay your attention on today's economic data coming from the Eurozone, where the IFA Business Climate or German IFA Business Climate Index probably should take a lion's share of your attention, and it's scheduled for 9 Greenwich time, so pay attention on this. Also, today's ECB Economic Bulletin and European Union Flash Manufacturing and Services PMI. But anyway, these kind of economic releases are not so important for the financial markets at the moment. So we pursue the long-term strategy in the euro dollar at the moment, and we put a stop. Now it's already a stop profit at 22.95, targeting the highs of this year around 25.20, 25.55. Probably the break above short-term descending trend line, which lies at the moment at 23.70, should a little bit accelerate the speed of the euro dollar upside speed. But anyway, the time will show. The dollar yen, where we're still losing the short-term strategy, but here we are more or less confident that of course the dollar yen is in the downside, is under the selling pressure, under the downside pressure at the moment. But anyway, here from the point of view of risk aversion fears, not everything is in favor of continuous slide of this pair to the downside. From the point of view of rebounding stock indices, the yen crosses should remain supported, and from this point of view, probably the nearest future downside potential of the dollar yen should be looked rather limited. And regarding the sterling, As you know, the Brexit negotiation process, finally the European policymakers and UK policymakers, finally they agreed regarding the so-called transition period of the Brexit. But of course, a lot will depend on Friday's concrete details of this kind of negotiation agreement, and probably for those looking for their continuous upside potential of the cable at the moment, we prefer to look especially to this kind of details. I mean, to the concrete details of this Brexit negotiation transition period agreement. Also today is the Bank of England Monetary Policy Committee meeting, which of course very important event for the sterling players. Also today's retail sales report. As you know, retail sales is a very important indicator of the current state of the UK economy and consumer confidence, as well as inflation expectations of the UK economy. But as you know, the last inflation data, like consumer price inflation, was a little bit lower from market's expectations. But yesterday's employment report, where the average hourly index was 0.2% higher from expectations, should give another impetus to the UK policymakers in their starting to normalize the interest rate policy in UK by increasing the interest rates already probably at the next meeting scheduled for May. And finally, the dollar Swiss. Okay, once again, it was our fundamental point of view, but technically also the cable is looking rather bullish. That's why we still keep our long-term strategy, and we will be ready to close our position on a possible retest of the level 142.75. And dollar Swiss, where we still keep our short trade recommendation initiated at 95.50. Here the situation is a little bit complicated from the point of view of short-term horizon, but anyway, we still suggest that sooner or later this pair will be back to its underlying bearish trend. Because as you know, from a longer term perspective, the pair still trades below moving average 200 daily line, which lies at 96.64. And from this point of view, also, as you can see, we still trade below longer term downtrend, which lies at 0.99. Of course, it's a little bit higher levels, not a little bit. We are joking here, but anyway, the situation is bearish for this kind of pair at the moment, and we